Money Pros is brought to you by The Real Money Pros and the sponsors heard within this broadcast. Material presented on this program may not be suitable for you. Consult a registered investment advisor when evaluating any particular investment, security, or investment strategy. The views, opinions, or advice offered by the hosts and guests do not necessarily reflect those of this station. Brian Wiley and Jeremiah Bates are investment advisor representatives with Apollon Wealth Management, an SEC registered investment advisor. The Real Money Pros with Brian Wiley and Jeremiah Bates, the weekend's smartest money show. Investing, taxes, legal topics, insurance, and every other confusing money topic made simple.
Well, happy Saturday to you. This is The Real Money Pros. You don't catch too many live financial programs on the weekends, but you just caught one. Caught a tiger by its toe. Or tail. Tail? Is it a tail? Oh, wait, you wagged the dog with the tail. Jeremiah Bates is here. I'm Brian Wiley. Financial advisors, fiduciaries only. We do what's in your best interest. We are experienced. We're trained. We're well-read. We can talk about lots of topics. We can talk, I don't like to do a ton of politics on this program. Politics certainly wraps into economic issues right now. We're going to talk about those in the program today. We can take your questions anytime you'd like because the program is live. 979-59-MONEY. That's 979-596-6639. Jeremiah Bates is here. I'm Brian Wiley. You can find us on The Real Money Pros. Jeremiah, Bitcoin, and a little bit more Bitcoin this last week. It's been really a headline issue.
No, it's been the headline this week, undeniably. You look at where was it out? October of 2025 when we saw the peak. It was just over. It was north of $126,000 a token. Now we've reversed back to, I think it was yesterday. We saw it down to just above $60,000 a token. That's a 52% decline. And obviously there was that momentum that was happening during the week. And, you know, if I don't know if those of you who spend time on Twitter, but, I tend to dabble a little bit. There's some good information, certainly some bad information on there. So take it with a grain of salt. But, it was like the sky was falling, meaning it's going to zero. And everyone who had a hot take seemed to have a hot take. And essentially disparaging this as just fake and all this good stuff, right? But we got to look at the reality of this. The very interesting stat for any of those who maybe were excited about this cryptocurrency, Bitcoin, and let's imagine you bought some of it, say when it was, I don't know, $120,000 a token, $125,000. You wanted to ride that momentum because you had conviction behind it. But going into this, you need to understand that there was multiple times where we saw Bitcoin drop 50% or more from an all-time high. Interesting stat to include the one that we just saw. If you go back to 2010, this is the 9th time that Bitcoin has experienced a decline of 50% or more from its all-time high. So when you look at the just baseline characteristics of what Bitcoin has shown over the past decade, a little more than a decade, this is a part of the price for entry, meaning this shouldn't be surprising. And I would argue that if you were optimistic and you had a set strategy around Bitcoin, meaning you liked it as a long-term holding, maybe a diversifier, whatever the case is, and you felt good about purchasing it at elevated levels, then you should be salivating at the idea that you could potentially purchase this at a 50% price drop from where it was back in October. But it's been interesting. And not even just Bitcoin on its own. You look at the entire cryptocurrency universe was getting punched in the gut this past week. And even on the technology side, you look at the NASDAQ, you look at these high-flying technology companies to the likes of Micron. We even saw some significant volatility in gold and silver. It seems like all of these investments, whether it's a commodity, a stock, a cryptocurrency, that have been riding this wave of momentum really over the past year, 6 months, if you will. There was a bit of a recalibration slightly during this week. We certainly saw a rebound on Friday with the Dow Jones hitting all-time highs. S&P 500 still about only two-term movements. The headlines and the level of these movements seem to spark some concerns for a lot of investors. Always has, always will. And I think that's the thing that I think I hang my hat on, Brian. I'm sure you do as well, as you're literally wearing a hat, that we can explain the reasons behind this and put some logic and kind of say, okay, take a deep breath, everybody. The sky's not falling. What does this ultimately mean for you, and where's the opportunity?
The whole Bitcoin craze, now a lot of people may understand it now, but you didn't understand it years ago. And I got that question, which is, how do you own Bitcoin right now and why do you own it? Call the program, 979-59-MONEY. Where do you think it's going to go? And if you own Bitcoin or an alternative, share those ideas with us. We want to hear them. We'll ask you questions as well. It's better for us to understand them as well. But maybe we've got some guidance in there. Because when you look back at Bitcoin, it's only been around for roughly 15 years. And in 15 years, if it's had that many deep cycle sell-offs in that amount of time, then that is an explanation, or actually a demonstration, I should say, about the nervousness of the participants and probably the noviceness of especially earlier on. We're talking about people who are scraping together a few bucks, your millennial typical, let's say. They're just post-college, or maybe they're not even really working. This is actually in the Great Recession, and Bitcoin was at 17 cents. It went down to a penny. So a penny, okay? If you had it now, you'd be stoked at $60,000. Who owns it at a penny? And then why didn't you buy it? Because I can give you a million reasons why I didn't buy into the information superhighway in 1984, buying Microsoft or Apple, trying to get interested in something that was so hard to understand at the point. I'm telling you, I grew up in the 70s and the early 80s, and I didn't see technology coming around where it was going to change the way that we did all commerce. Had I known that, then yeah, it'd been the smartest investment you could have ever made when you're 16 years old. Okay, why do you own Bitcoin now? What price did you buy it at? What's your objective? Last week we had a caller, Jeremiah, and you were out. Which, by the way, do you feel better?
I do.
You sound better.
Antibiotics, modern medicine. It's a wonderful thing. Came down with pneumonia. Still a little bit of cough, but you bombard it with a couple rounds of antibiotics, and you're on the mend pretty quick.
Well, I'm glad you're on the mend. So last week we had a call. Gentleman was asking about silver, and I was just asking, well, what's the purpose? Currency hedge, or are you looking to make gains in it? And he wanted to make some gains in it. And I have to say this, about 4 years ago, I was given a lot of preference to silver, and I was explaining it on the air why. People say, I wanted to buy gold, safe haven. Okay, fine, buy gold. If you were looking at it because you thought silver or gold was going to go up dramatically, which a lot of people thought back in the time, oh, the U.S. dollar's going to nothing and I got to buy gold. I said, well, then buy silver, because silver is not as widely held and widely traded like gold. It's still very useful. A lot of speculators are still in silver. You find more speculators in platinum and palladium, and you can go through the lists of certain precious metals and you'll see it. But now Bitcoin is becoming a little bit like gold in the respect of the currencies, the cryptocurrencies, the crypto digital assets. If you were to look at how widely held Bitcoin is compared to its next biggest competitor, which is what, Ethereum?
Yeah.
And then after that, maybe Ripple, XRP?
Yeah, Ripple, XRP.
Okay. And you'll notice that the other two are more volatile, but they will trade based on what is happening in the bigger cryptocurrency, which is Bitcoin. That's the same thing with silver, and other metals will chase what's going on with gold. So slight movements in gold, you get amplified effects in silver. So for those of you that have Bitcoin, you're worried about it right now, what's your recovery plan? Because maybe you're thinking about a quick recovery. Well, then why wouldn't you go mix it in with some more of the volatile ones? If you were in it for the volatility in the first place, well, then suck it up and go to where you're going to recover. And I don't know where it's going to be. And I don't know that. I think right now the markets are doing something that is very logical when it comes to Bitcoin. We're questioning what it is. Venezuela was using it as their currency for the most part. Because people are changing their paychecks out. Well, maybe there is some currency, validation in there. Really, it's just about exchanging it into purchasing power that you had.
Well, when you look at these movements, I think this is one of the biggest arguments against Bitcoin becoming a legitimate currency, meaning a wide world used medium exchange for barter for whatever.
Imagine going to Subway and then telling you your $6 sandwich today, tomorrow you go over there and they say it's $14. You go back the next day, it's $3. What?
Well,
wait.
And then arguably we're seeing that silver's been on a run. But again, we've been seeing some incredible volatile movements in the price of gold and silver, really based off the 2 weeks. Now, of course, you zoom out, you look at that 2-year performance, it's with any chart you really look at, the market, Bitcoin, you look at that long-term trajectory, clearly we're seeing it up and to the right. However, again, when it's these gold bugs and these silver bugs, hanging their hat, thinking that, oh, this is the safety net. This is the safety of everything, of the dollar going down, which I don't know if you talked about this last week, Brian. I find that interesting. I've had some contacts coming out and talking about the debasement of the dollar. I'm like, whoa.
Again.
We're seeing about a 10% move. It's been very strong over the past few years. I think this is a normal rotation out of that with a slim drop. But again, you look at the volatility of these types of items, and it puts to bed of that being some replacement currency to some extent.
You can join the discussion. Let's make it into a real money discussion. Call the program 979-59-MONEY or find us online at therealmoneypros.com. We have a chat feature there. Jeremiah Bates, I'm Brian Wiley. We're going to take a break, but we want to talk about why you own any cryptocurrency. We'll do that when we come back. Make this year that you work smarter, not harder, with Ataraxis. As your strategic partner, Ataraxis becomes an extension of your business, taking the burden of HR, payroll, benefits, workers' compensation, compliance, and staffing off your plate. You'll have more time to focus on operating and growing your business. Let Ataraxis handle the details so you can focus on what matters most. Learn more at ataraxis.com. That's ATARAXIS.com.
As we age, managing our finances can become increasingly complex with ever-changing tax laws, estate planning, insurance needs, and investment environments. At Apollon Wealth Management, their goal is simple: to help enrich your life with personalized, expert financial advice. With a nationwide network of advisors, they're committed to delivering the best solutions for your financial future. It's time to take control and get the guidance you deserve. Connect with an advisor today by visiting The Real Money Pros. That's therealmoneypros.com.
Looking to make your dream of home ownership a reality? Look no further than Academy Mortgage, your first choice home loan lender. Academy strives to offer the best rates and terms tailored to your financial situation. At Academy Mortgage, you'll be treated like family, not just another file. Navigating today's ever-changing housing market can be challenging, but their team is here to help. Experience the zero-down options, including loans with no mortgage insurance. They also provide specialized medical professional loans and unique 2-to-1 rate buydowns that reduce your monthly payment for the first initial years of your loan. And forget about dealing with brokers and middlemen. With Academy Mortgage, everything happens in-house, from origination to funding. Say goodbye to hassles and surprises. Begin your home ownership journey today by visiting them online at academymortgage.com. That's academymortgage.com.
Academy Mortgage Corporation, NMLS 3113, is an equal housing lender.
Academy Mortgage, your first choice home loan lender.
This open enrollment, start making meaningful progress towards your long-term financial goals. Did you know that a health savings account, or HSA, is the most tax-advantaged account in the U.S.? Contributions are tax-deductible, which reduces your total taxable income. Withdrawals for eligible health expenses are also tax-free. And last, capital gains on investments are also tax-free. Did we also mention that it's free for individuals? Visit livelyme.com/pro today. That's livelyme.com/pro.
Back to the Real Money Pros.
And we're back. This is the Real Money Pros. Jeremiah Bates, Brian Wiley, fiduciary advisors here for you. Any topics you want to cover? Estate planning, taxes. Tax filing's right around the corner, believe it or not. Should you look to file early? What are things that you should take into consideration when it actually comes to the logistics of tax forms? What do they mean? How can you prepare yourself to make sure that you're not paying more in taxes than what you need to? You got questions? Send them our way. Phone lines are open, 979-59-MONEY. That is 979-596-6. Cryptocurrency, volatile week in the markets, particularly on the technology side of things. However, what we do know is that these short-term bouts of movements in the market don't necessarily set the trajectory of what we're going to see over the year, next 5 years, or 10 years. I mean, even if we look at performance year to date, the Dow Jones Industrial Average up over 4%. The S&P 500 up over 1%. It's about 2% off of its all-time highs, by the way. And the tech-heavy NASDAQ, with its incredible run, down close to 1% year-to-date. This week, NASDAQ pulled back about 2%. Dow Jones finished up 2.5%. S&P relatively flat. International still outperforming U.S. investments this year. If we look at the index, really the representation of international investments excluding the U.S., up over 4.5%. Bonds still relatively flat. I think the bond market is still trying to get a gauge of where interest rates are going. We got a new Fed chair that's going to be inserted, I believe, in May, replacing Jerome Powell. Market reaction was a little muted. You have some pundits coming out of giving their hot takes of what he's going to do, and this concern around the separation of the Fed and the influence of Washington. We'll see that track record. Warsh, the first name's escaping me, but
same.
Yeah,
I read about him as well, and I don't know that much about him, so I'm not here to judge. I want to try to figure out if there's going to be substantial changes in how the Federal Reserve is operating in the future.
And Brian, I've said this before, but I do want to make a point to be redundant with this, is that with what we've seen, assuming that you were invested in a way where you saw this incredible gain really over the past few years where we've seen this bull market run, and now we're starting to see what you could argue is some normal volatility, but just coming off of the fact that over the past few years we've had unusual lack of volatility. So these movements, even though in my opinion should fully be expected as far as being an investor, that is the trade-off. You want that reward, you got to be willing to take that risk. We're seeing that risk being right in front of us with the movements that we've seen. But again, what does this mean for you? And the fact that we've seen such good gains and you've participated in that, in my opinion, this gives you such an opportunity to revisit the plan. Revisit it. If you did a plan a couple years ago, 5 years ago, or you haven't done a plan and you're on that aggressive bucket of money, if you will, that's where all of your eggs are in that one bucket, that one basket. You have an incredible opportunity right now to say, okay, if I'm nervous, if I'm losing sleep at night based on, I don't care what it is, let's identify that fear. Let's recalibrate to make sure that those fears are in fact legitimate. Let's make sure that you have a plan in place to where, listen, this is what I tell clients a lot. You never know. We could see a 20% drop. You could see a 30% drop. I am not anticipating that. However, I do not have the crystal ball. But none of that matters. Whoever says that. If I have a hot take of where the market's going, Brian, if you have a hot take, you can't hang your hat on that. I've said that a couple times this program, so it's like the phrase of the day. You can't hang your hat on it. You have to make sure that your situation is thought out, it's logic through, and that you can withstand any volatility and it doesn't mess up your lifestyle, your quality of life, your enjoyment, your trips, whatever it is, or the money that you need for taxes, right? Because that's going to be around the corner. So perspective is very important, in my opinion, when these headlines are abundant with speculation on, Bitcoin's going to zero, or, this AI revolution, this is way overhyped. Software companies are going to be obsolete based on what the coding capabilities of this AI can do. Whatever the narrative is, if it's not that, it's going to be something else. So again, just pulling it back to what does this mean for you? Are you in good shape? Even if these movements do make you nervous, you can always lean on the fact that I did the plan, I know I'm okay, I forecasted this, and I can sleep easy at night.
If the markets actually function and they react to hyperbole. So hyperbole is obviously the headline grabber. And if you think about headlines, in every case, when you're going to read about something, if you go to some news website, the headline is what's supposed to grab you and bring you in there, right? So it has to have something barking at you, and it's going to create an emotion like, oh, I want to see more of this, or, oh, I'm afraid of this, or whatever it might be. And that's the way that the markets work. And if one thing is doing it, so based on just what you said, where there's all these extremes in these viewpoints where AI is just going to be a bust, or AI is going to control everything. Well, it's probably neither. With Bitcoin's going to go to zero. The U.S. dollar is going to go be debased. Yeah, except we just took over Venezuela with 320 billion barrels of oil underground. I'm pretty sure that could be a dollar stabilizing move. Has the dollar fallen? Now, the headlines will tell you right now that the dollar has been falling and really doing the majority of the falling during the Trump administration. That's not true. The dollar ran up to an unusual space during the Biden administration and it had to come back. And it had to continue to come back after the Biden administration. Arguably, the dollar has been very stable considering the volatility in the markets, and you've got Bitcoin doing this stuff. Dollar's been very steady. If you're looking at the dollar, like how do you value the dollar if you compared it against other world currencies, and if it had basically, it's like a speedometer. And you think of this as, we've seen it as low as roughly 60s. We've seen it as high as, well, now the 130s. But it seems to rest somewhere around 90 to 100. And when President Trump was talking about where they want the dollar, he was dead on right. He said 92 to 95, and that is actually the number that we're looking for. And here's the reason why. If it goes too much higher, nobody can afford the goods that we send out of the United States because they'll compare it to another foreign good, and then it may be the currency exchange rate that's actually going to give them preference to the foreign good. If it goes too low, well, then we're actually we're producing too much, and we're not getting paid enough for it. Like, we won't be able to reinvest ourselves into continued success. You want a stable dollar. The Federal Reserve is tasked to try to stabilize the economy and the job situation, but also the dollar. The dollar is going to be directly affected by that. So substantial moves, in my opinion, it kind of goes back to the hyperbole. This is what we got to do. We got to lower it down to zero. Nope. I don't think that that's the answer. And if you're going to back out of this thing, you got to do it with the taper. Like, you just got to be careful because there could be some unintended consequences causing more people to worry. Now, you as an investor, if, like Jeremiah opened up the segment talking about, this is a great time to go review things. I've spent 26 years now in this career, actually. 26 years of it, and it has been largely populated by clients that were filled with worry, and it's usually after something happened. Market went down, divorces or whatever it is. Like, they come in recovery mode. Like, what do I do? Why not when it's good? To do it as a checkup on your plan, or like, I don't go to the doctor to get a wellness checkup. I probably should. I guess I do kind of now, but I probably should. And I know that I'd probably be better off health-wise if I did it, but why don't I actually do it? Am I afraid of the result, the time I have to spend, the money I might have to spend? What if it's all worth it, and what if it ends up buying you peace of mind? You get some of that just by calling the program here right now, 979-59-MONEY. Still one big question. Why do you own cryptocurrency? What's the objective? Tell us your opinion. We'll hear that when we come back.
Apollon Wealth Management has transformed the way our team delivers financial advice. With their support, we're more equipped and more empowered than ever to provide top-tier financial planning, investment management, and personalized financial guidance. Apollon has been a key partner in helping us achieve our clients' unique financial goals. Whether you're an advisor looking to enhance your client experience or an investor ready to take your wealth management to the next level, reach out today to the Real Money Pros by visiting therealmoneypros.com. Let's elevate your financial future today.
I'm Nick Daniels with Tree City Advisors of Apollon. My team and I help our clients implement tax-smart strategies because taxes are one of the largest headwinds your investments face. We use strategies like Roth conversions, 1031 exchanges, and more because a good advisor should help you with more than just investment selection. Visit us today at treecityadvisors.com or call us at 208-888-1244.
Advisory services offered through Apollon Wealth Management, LLC, DBA Tree City Advisors of Apollon, an investment advisor registered with the Securities and Exchange Commission.
As a financial advisor, I often see that many families I meet with end up paying way too much money in taxes. If a healthy family has an insurance plan with a low deductible but high annual premium, why wouldn't they look at a high deductible insurance plan instead? They could save on their premiums and put those saved dollars into a health savings account, also known as an HSA. It's the most powerful tax advantage account title available to us, so why not use it? Take advantage of pre-tax money that could be grown tax-free and then use tax-free for all of your qualified healthcare expenses. That's why you need Lively, our favorite because it's simple, fast, and free. I use it, my colleagues use it, and I recommend it to all of my clients. Visit Lively right away. You can even roll over your existing HSA money into this new plan and start saving. Know you're going to love the entire experience. Visit livelyme.com/pro today. That's livelyme.com/PRO. Lively is a proud sponsor of the Real Money Pros.
Begin your home ownership journey today. Look no further than Academy Mortgage, your first choice home loan lender. And forget about dealing with brokers and middlemen. With Academy Mortgage, everything happens in-house, from origination to funding. Say goodbye to hassles and surprises. Their team of seasoned professionals will be with you every step of the way. That's academymortgage.com. Academy Mortgage, your first choice home loan lender.
Academy Mortgage Corporation, NMLS 3113, is an equal housing lender.
Imagine financial advice without a sales pitch to buy something, and imagine a long-term financial plan focused on your goals, not somebody else's, and the day that you can leave your broker because you know how to do things on your own. At Tree City Advisors, we do things a bit differently than our peers. First, we help you define your purpose for investing. We help you clean up messes or complicated financial issues from your past. We help you organize all your financial pieces into something manageable. We're a fiduciary-only firm, and we design simple strategies. And we teach you how it all works without clutter, confusion, or high cost. We can either do your investments for you, or we can teach you how to do them on your own. In the end, we empower you with knowledge, lower fees, and confidence. Welcome to Tree City Advisors. This is the way we think if financial advisors should work for their clients. At Tree City Advisors, we provide flat fee planning and training. We also offer full service asset management, and we employ do-it-yourself technologies. There's never a fee for an initial meeting or review, so let's get started. Learn more at treecityadvisors.com. Tree City Advisors is an SEC registered investment advisor.
Listening to the Real Money Pros.
We are back. This is the Real Money Pros. You go to the realmoneypros.com, see the great new website that we have. It's interactive. We have a chat feature there. We have a newsletter. We'd love it if you sign up for it. It's all sponsor supported. We're not selling you anything other than great sponsor exposure. And the more of you that sign up for the newsletter and participate on this program, the more widely it will be broadcast, which right now it's all across the nation. We appreciate our partnership with iHeart, Cumulus as well. It's been a great adventure. So what we're doing is we're bringing you real fiduciary advice live on the weekends, which has not existed in several years. I appreciated the prior hosts that were doing it. I used to admire the work. They're not doing it, so we're doing it. Jeremiah Bates is here. I'm Brian Wiley. This is what we're spending our Saturdays doing, and if you're not getting the help that we're talking about, then call the program and start it. We have a network of advisors that we can connect you to. We have lots of information on our website. We have great sponsors who are actual help to our clients. So we've tested them. We vet them. We make sure that they're treating our clients well. I told Jeremiah, I said, we really ought to start getting paid for like taxes and things like that, because we send it to any tax professional. If anything's ever a problem, the client's going to call you first. Like, you may as well have collected at least $1 for knowing that you're responsible for the way that they're going to do business. And that's true. And we're happy to be in that position. We don't take any money for tax preparation. We don't take it for estate planning. But sure, I would love to design a way to be able to do it. Same thing with insurance. Look how much insurance we send out of the office to people who then just receive the referrals. It's a hot lead because we sent the client there with a need to fill, and then we get nothing out of it. They get the insurance policy, they get their commission, they didn't have to work for it. But that's a fiduciary. And I've struggled with that, which is the conflict in advice that happens whenever an incentive is added to the advisor. And the incentive could be, it's like going to a chiropractor and they're selling you a membership and herbs, and now you're getting injections and all this other stuff. And, they benefit from all of that. So did you really have a problem, or is this just everything kind of led to what they do? I do want to talk a little bit later or in the next hour, Jeremiah, is I've got a friend who is new to the insurance business. She's asking me, can you explain annuities? And I said, oh, man, I got to say it nicely. I've got to give the practical uses. I said, absolutely, I'll explain them and how they function, the whole thing, and why I think generally advisors usually does not advise a client to go into the annuities, with some exceptions, but very, very few.
Always exceptions to the rule.
Yep.
But back to your point about the tax side of things, just had a meeting with a client, self-employed this past year. Interesting. They're a real estate agent, and I got a handful of clients that fall under that category of employment, and a few of them, it's been a little bit of a lean year, arguably a lean past couple of years, and she's been on the complete opposite side. And I asked her, I'm like, well, what would you attribute to that success? Meaning, I think most people, they look at the lack of movement in the real estate sector. It seems like sellers are still trying to hold on to those elevated asking prices. Buyers are still waiting on the sidelines because they feel they're waiting for those interest rates to hit that Goldilocks number of 5% or whatever the case may be. It was a cool story of how she's like, well, she literally, to stage a house, they took the furniture out of there. So they had a seller, a client that she was working with. There was no furniture in the house. She's like, we got to stage this. She literally took the furniture out of her house, and her husband was like, yeah, I didn't disagree. I didn't agree. And she's like, I told you to work. Well, he's like, well, we didn't have any furniture when we were eating dinner. Like, our table was out there. Our couch was there for a couple days because you were staging. So just the story was great behind it. But the point being is, on the tax side of things, they had an unexpected high income year, and their previous tax preparer, and I want to use that exact term, tax preparer, is like, they were not getting any advice. And they had worked with this person for a number of years, and it was just, hey, give me your net income as a self-employed person. If you have any tax docs, here you go. We'll get it all after the year. And they're like, we were missing all this opportunity. We're self-employed. We could have prepaid meaning the structure of our business entity. We could have prepaid our state taxes, our estimated state taxes within calendar year 2025, and that amount could have, in fact, reduced our federal income via the ABE payment. And it's like, we didn't know this, and we were up against the clock, and that was referred. We only got that advice from a friend who gave it to us last minute. And they said, we're moving to to someone who's actually giving us tax advice. And I said, I think it's a common theme, whether it's an advisor you're working with the tax advice you're getting, whether it's the insurance, or maybe it's estate planning, where it's easily to get yourself in a rut, inertia, where you're doing the same thing. But 5-10 years can go by quick, and you can quickly find yourself you're more sophisticated. Nothing against the advice that you're getting previously, but meaning it reached its limit, meaning you hit that resistance, if you will. If you're talking about technical analysis on movement of an investment, you're hitting that resistance. You need to move through that and make sure you're getting that holistic advice around everything that we're talking about. And Brian, to your point, well, you do not want me, and you sure as don't want Brian putting pencil to paper on executing your actual return, right? But through our experience and again, I put a focus on taxes, probably more so than other advisors. I do think there's a trend of fiduciary advisors really putting themselves at the forefront of what are the changes happening in the tax world and how does that affect their clients. I think that's great, something I certainly do as well. And this is what I say. We can give you the education. We can give you the game plan, and it may not always be right because we want to put it in front of that tax professional because they're the ones that are actually going to execute it. But at least we're asking the question. At least we're turning over that rock and see if it's a viable option. Because we're talking about low-hanging fruit. You don't necessarily – because it's all what happens at net at the end of the day. And if you can save on taxes by literally just using one account versus the other, moving from one account to the other, taking money out of this account in December of one calendar year and taking the remainder out in calendar year of the next year, which translates to tangible tax savings, these are important things where – then you can look at that from a net return standpoint, which is not determined by the movements of the market. So the tax piece, in my opinion, it's there. It's always going to be there. You could argue it's complicated, but you can use those complications to your advantage.
So a couple of weeks ago, we had a caller on the program, and I had asked our producer, I said, will you ask him if I can call him after the program? He said, sure. So I ended up calling this gentleman, and it was a great conversation. Probably he was a little surprised that I called him, but I said, back in the day when I first started doing Financial Talk, like if we needed to get people to understand they can call the program, there's this thing out there called planting calls. I'm like, your calls were so fantastic. Like they're great. He was asking about Roth conversions. He was asking some technical parts. And I said, it's great because there are some people that need to hear what they're missing from their advisors. I told him, I said, no, we look at everything. Like when we sit down with people, we're looking at their tax situation, their family situation, the risk. Now, if you imagine like that self-employed person that you were talking about going to their accountant and they just want garbage in, garbage out. So here's the QuickBooks account. They go classify all your expenses. They get paid for that. And then they go and generate your tax return. Do they come back to you and say, why aren't you filing as an S-Corp? Or, hey, have you ever considered setting up your individual 401k for you and your spouse, perhaps? Or have you thought about a profit-sharing plan? We've seen these things. We saw one on the radio program, was it like 8 years ago? He was calling out, I think, Fresno. He was out of Fresno, California, and he was explaining to us his self-employed business that he had. And he had multiple properties and farms and equipment and leasing companies back to himself. And I'm like, man, that's all super smart. Like, are you doing any sort of a pension program for yourself? Did you know about this? No. And I said, he's like, how long have you been working with that CPA? He says, like 20 years. I'm like, I don't know a single CPA that I like enough that he's going to cost me $250,000 a year in extra money paid to taxes. And that was a start call, but that was real, and that was live on the program. 979-59-MONEY. Does your advisor actually have a two-way conversation with you about everything that's going on, or is it all about your investments every time? And if that's the case, a good advisor should be covering all of those other topics on a regular basis. Now, we're talking about doing beneficiary audits. You think your estate planning attorney should be doing those? They typically don't. Your advisor is the one that's going to end up dealing with you and your estate and your family after it's done. So a beneficiary audit is a great idea. Oh, you got divorced. You probably take your ex-wife off that. Or you might want to change your life insurance beneficiaries to no longer go to, let's say, your trust and have it go directly to your children. And there may be some estate planning issues that need to be updated in there, but who's catching them? Because, yeah, we can talk about your Vanguard stuff. We can talk about your Schwab account. We can talk about all the Bitcoin and all that other stuff, but how does it really apply if we don't know that we've shored up all these other areas first? 979-59-MONEY. That's 979-596-6639. Jeremiah Bates here and Brian Wiley. Go to therealmoneypros.com. We're easy to get a hold of. Fun stuff.
There's strategies and ideas, but there's the execution of it. Making sure that it's done the right way. So you, nothing, you fast forward the clock 5, 10, 15 years, it doesn't come back and bite you in the butt. You want to find a creative way to route some money to your kids without it being a gift, which could affect the estate planning side of things, and you want to, in fact, do it as a loan. How do you do it? These are real-life conversations I had with a client. It's great. It ultimately comes down to what do you want, your desired outcome, having a trusted source of knowledge that can help you get there with confidence. This is The Real Money Pros. We'll be right back.
Businesses today face a barrage of challenges. They hunt for top talent, the search for the right benefits package, and the ever-rising tide of healthcare rates. And putting together the right team to run your HR-related tasks can be expensive, let alone time-consuming. Enter Ataraxis PEO, your professional employer organization ready to tackle all your HR needs from payroll to benefits administration, payroll services, workers' compensation, and talent recruiting. They've got you covered. With Ataraxis, you gain access to a team of experts who handle the nitty-gritty of HR, freeing you up to focus on what you do best, growing your business and growing your revenue. Ataraxis takes the time to learn about your business, crafting personalized solutions to help you and your team succeed. So say goodbye to the stress of HR administration and hello to Ataraxis. Experience the power of a true business partner with Ataraxis PEO. Visit ataraxispeo.com. That's ATARAXISPEO.com. Ataraxis, elevating businesses for the benefit of all.
Have you ever met with a financial advisor looking for some advice just to leave being sold an annuity you didn't want? At Tree City Advisors of Apollon, we do things a bit differently. We focus on your financial goals, helping you fix past mistakes, simplify your current finances, and plan for the future with confidence. Your first consultation is always free and without obligation. Visit TreeCityAdvisors.com and start your journey to financial freedom now. That's TreeCityAdvisors.com.
As a financial advisor, I often see that many families I meet with end up paying way too much money in taxes. If a healthy family has an insurance plan with a low deductible but high annual premium, why wouldn't they look at a high deductible insurance plan instead? They could save on their premiums and put those saved dollars into a health savings account, also known as an HSA. It's the most powerful tax advantage account title available to us. So advantage of pre-tax money that could be grown tax-free and then used tax-free for all of your qualified healthcare expenses. That's why you need Lively. Our favorite because it's simple, fast, and free. I use it, my colleagues use it, and I recommend it to all of my clients. Visit Lively right away. You can even roll over your existing HSA money into this new plan and start saving right away. I know you're going to love the entire experience. Visit livelyme.com/pro today. That's livelyme.com/PRO. Lively is a proud sponsor of the Real Money Pros.
The Real Money Pros.
We are back. I was asking earlier about crypto digital assets. Do you own Bitcoin? Are you worried? Do you own XRP? Do you have a reason for it? How do you own it? Why do you own it? And it's just great for a conversation. It's very volatile right now. There was big declines in it. Jeremiah started the program talking about 8 times in the last 15 years. It's went down more than 50%. It's the recoveries that just are amazing, though, because after big declines, if the asset is still viable, if there's no real reason, other than just trading volatility, whatever it might be, then typically they'll creep back up. It's the returns after they fall the deepest. Like, for example, it fell in 2017 to 2018, down 84%, but it made a 534% recovery after that, till its next big dip in 2021. And in most cases, it's the same thing. So last year, March 8th, I believe, that's when the new tariffs were announced, a big long list of all the countries and what they're taking, what we're going to make them pay and everything. President Trump's holding it up. The market just plummets. And we got on the air saying, if you don't recognize this as one of those emotional sell-offs where people are now they're politically motivated. Some people just didn't like him, so they're selling. Other people were just afraid because they didn't understand it, so they're selling. And then other people were selling because everybody else is selling. It's a herd mentality. But it was like, wait, but stop. Do we see that we still have all these viable businesses that are producing profits that have a lot more value from where they had been to where they're selling off, and there was an opportunity? So how do you treat those sell-offs? Is it with fear, or is it do you see some opportunity in it? And you want to say it's opportunity, but had you gone through the planning to see if you could take advantage of that opportunity? Because I had a friend offer me, it was like years and years ago, he's like, yeah, Brian, if you put $100,000 into this, I know that we're going to turn it into $1 million. I'm like, you know what? You could tell me all about this great investment. You're just going to make me have more FOMO at the end of it because I don't have the first $100,000. That was many years ago. And I remember that as an experience for most people. Like when you're being told or you're paying attention to hyperbole, the headlines, do you start getting more anxious? Most people do, because it's either more fear or more left outness, whatever it is. And it's the hyperbole that got you there in the first place. So there's an advertising reason for it. And there's this big vicious circle. And the reality is you probably wouldn't even click on the headline if you actually had a true strategy and understood it and weren't fearful about it. You wouldn't click. You just, I'm not going to read that. It doesn't affect me. There's some wiseness that comes to that. And we want you to have that wiseness. And I think that every person listening to this program, and I said this to that caller after the program a couple of weeks ago, as I said, every person is capable of fully managing their own accounts. The question is will they actually do it? Because a lot of us, we lose a little self-control with emotions, fear and greed. We do something, we're like, yeah, I'm just going to hold on to it a little longer, like Micron stock.
Didn't have enough. Like your blood sugar's low. You didn't eat breakfast, and you're already, kids made you mad.
They end up doing a lot by feel, and by feel is where it just doesn't work. It has never worked. I've seen it in 26 years. The feel thing doesn't usually feel good at the end. Usually, I guess. Prove me wrong. I get it.
Well, it's, again, and this is probably a statistic or a chart that many investors have seen. And I'll give you the number. So if you look back, let's imagine you had $100 to invest in an S&P 500 index. Just kind of as boring as you could get, I guess you could say. And if we look at that return over a 20-year period, so let's go 2006 to 2025.
Dividends included?
Dividends included.
Okay.
If you stayed invested without making adjustments throughout entire time, your amount would be roughly north of $800,000 over that period.
8x. And this is actually going through the Great Recession sell-off, the COVID sell-off.
Correct.
Yes. If
you miss the best 5 days in the market, that return drops to $497,000. 5 days. 5 days. If you miss the 10 best days, your return's now $358,000. Miss 15 days. Miss 15 days, visual. $269. You miss 20 days, $211. You miss 25 days, your return is $170,000. So it's just and this is basic, what you could almost call the fundamentals. And I get it. You hear it, you're like, okay, I get it. Fiduciary advisors go and say, ride it out, stay invested. But there is something to be said about having that detached counsel. I don't have emotional ties to Brian's money. Let's put it that way. So if Brian comes to me in a tornado of emotion, I forget what movie that's from, but if it's like a tornado of emotion rolling around in his brain, I'm detached. I don't have tangible financial targets that are tied to Brian's money. So I can help him separate and say, let's put some logic back into this. Let's really dissect these fears. Are they legitimate? Are they not? Okay, is it a legitimate fear? How can we make sure that things are adjusted to make sure? But certainly the answer is going to be, let's completely pivot from the strategy that we both agreed on 6 months ago based on what this headline is saying or what is this saying? Because the proof is in the pudding. You missed 5 days over that past 20-year period, which, Brian, you nailed it. In that 20-year period, you're talking about great financial crisis. You're talking about some big market events where if you just left it alone, you can see where that end result gets you. And a big thing, too, I don't have the exact numbers, but generally speaking, the best days in the market are right on the heels of those worst days. And you don't need to rewind the clock too much to look back at last year, Liberation Day, when those tariffs were announced. Yeah, the market was getting beat up, but it didn't last very long, meaning that recuperation happened real fast. So if you made that pivot, and Brian, you've said this before, when you try to time the market, you have to be right twice. You got to time it right on the out, and you got to time it right back on the in, and that's where it gets you. Getting back in, you're likely going to, statistics will show you'll likely miss those best days. And we just cover the numbers. If you miss those best days, you're missing out on tremendous opportunity.
Are you able to use that same time period and say if you had missed the 5 worst days?
Let me see if I can find out.
Yeah, because I think that would be interesting to see what that 800,000, it should go up a little bit. I'm curious if it would go up as dramatically as you would think. It's usually the recovery days are bigger. So you see the losses. A lot of times they'll trickle down and then there'll be sudden big losses, and that is what a lot of us would look at as capitulation, where people just threw in the towel and they quit. You can see it, huge amounts of volume and a sell-off, and then it stops, and then program trades go in there and purchases, and that usually will set the bottom. It was very clear that had occurred last April. We all but barked it out, said pretty sure the bottom's in, but can't say we guarantee it because we can't. We don't know all investor behavior, but it becomes fairly predictable at time, and you don't want to be that person. That's why the strategy is going to win. It's the emotional investors that the strategic investors are going to be making money from. And you get to decide which one you are. And I see you're searching for that. Maybe we'll find it in the next hour. But
click around, see if I can pull something, rabbit out of the hat before we get it.
So it's got to be some AI answer to that one. Anyhow, what I've noticed through all that time, like my most successful clients, they were not very exciting people. They were just like, they sucked away money and all these. But then we have had many clients that have owned great businesses that make quick gains. Some of them really admirable because they reach out, get advice, and so on. But if you're like me, you think you can do everything on your own. Like, oh, yeah, I could just do this on my own. 3 times, Brian, that's it. That's what it takes. So you do it the first try, throw it away, the second one, modify it, and make the third one, and it finally came out. And you can't do that with your money. A lot of people don't have the opportunity in their lifetime to have 3 tries from, taking it all the way back to nothing. So you've got to make some smart choices. And I would just highly suggest that people ask questions of their advisor. Go out of date planning questions. Does it coordinate? Hey, will you do a full plan for me? Even if it includes, going through some process that's very boring, just do it for confirmation that you have a strategy. Otherwise, you're paying somebody for that, and you're probably not getting the value for it. Did you find anything?
No, it's going to take me a little bit of time to get it.
Nah,
But
no,
I'll get in the second hour. But
sure.
it's like, it's like my kids, they're of this age where I don't want to miss these important moments in their life. It's great. You can almost look at that from the investing side. It's like you're raising your kids and you're spending time with them like when they're having tantrums and falling apart, and you're missing when they're, graduating preschool, or they had this great painting or this great grade, or they had some sporting accomplishment that just warms your heart as a parent. Same thing with investing. It's like you don't want to pigeonhole yourself into just lamenting those worst days. There's good days to be had, which translate into that compound growth, which is what we're all here for. This is The Real Money Pros. Next hour is up. Stay with us.
The Real Money Pros is hosted by Brian Wiley and other team members of Tree City Advisors of Apollon. Tree City Advisors of Apollon is a DBA of Apollon Wealth Management, an SEC-registered investment advisor and affiliate of the Real Money Pros. The Real Money Pros and Tree City of Apollon are not affiliated with any of the companies or non-advisor professionals participating on this program. Ataraxis PEO and Apollon Wealth Management are financial sponsors of the Real Money Pros. Additionally, Apollon receives advisory fees for these sponsors and or their representatives for investment advice. Log into therealmoneypros.com to contact the host for advice, show archives, educational material, and more. This program is brought to you by the quality sponsors heard within this broadcast.
Businesses today face a barrage of challenges. They hunt for top talent, the search for the right benefits package, and the ever-rising tide of healthcare rates. Ataraxis takes the time to learn about your business, crafting personalized solutions to help you and your team succeed. Ataraxis partners with businesses of all sizes and industries. Their mission? To reduce the stress and risk that comes with business owners trying to do it themselves. Visit ataraxispeo.com. Ataraxis, elevating businesses for the benefit of all.
Your emotions can drive many decisions, but when it comes to money, they shouldn't be in the driver's seat. I'm Alex at Tree City Advisors of Apollon. We get to know you and your goals to build a holistic, time-based investment strategy. Investing isn't rocket science, but having the right partner helps you stay the course. Learn more about us at treecityadvisors.com or call us at 208-888-1244.
Advisory services offered through Apollon Wealth Management, LLC, DBA Tree City Advisors of Apollon, an investment advisor registered with the Securities and Exchange Commission.
Are you a do-it-yourself investor looking for ideas from a pro, but not necessarily interested in hiring a pro? Well, I have something to share with you. I build investment allocations for my clients on a daily basis, but sometimes people simply ask if I will share my ideas with them. My answer? Sure. The way I see it, I'm lucky these people consider me to be an expert. So I started writing a quarterly newsletter with model portfolios built for different purposes. My readers get to decide if they want to follow any or some of my ideas. Now, powered by freedomfolios.com and the use of their TD Ameritrade account, my followers can get their investment portfolio in line with my suggestions with the simple push of a button. Using the freedomfolios.com technology is simple and it's fast. I update my models once a quarter, and freedomfolios.com then sends my subscribers a message via email or text letting them know that they may want to update their investment accounts. It's the least expensive way to get professional models without the cost of a pro. Visit freedomfolios.com. See my models there. You can start your free 30-day trial right now. It's freedomfolios.com.
I know you've been waiting a little bit longer longer than normal.
Jen's manicure spot needs an extra pair of hands.
Who's at the front desk right now?
Someone who's handy with everything from nail files to spreadsheet files.
Deidre's not coming in today, but we have that whole bachelorette party.
Indeed can help her hire great people fast.
I need Indeed.
Indeed you do. Instant Match instantly connects you with quality candidates whose resumes on Indeed match your sponsored job description. Visit Indeed.com/credit and get $75 towards your first sponsored job. Terms and conditions apply.
To offer valuable advice and earn clients' trust as an advisor, it's essential to always put their interests ahead of personal gain or the preferences of any particular company. Advisor Insurance Solutions is dedicated to delivering insurance solutions from an advisory perspective. They provide objective and unbiased insurance planning, making it an integral part of their comprehensive advisory process. If you're looking for insurance guidance that aligns with your financials.com, that's therealmoneypros.com.
Are you in the market to buy a house or just looking to refinance your current mortgage? For helping individuals and families achieve affordable homeownership, Academy Mortgage is a first choice. And when finding that perfect loan for the perfect home, you need a company that will treat you like family, not just another file. To help you navigate through today's ever-changing housing market, Academy Mortgage has zero down options available to you. That includes zero down with no mortgage insurance. We also offer medical professional loans and 2-1 rate buydowns that help lower your monthly payment for the first several years of your loan. Origination, processing, underwriting, and closing and funding will all happen in-house. With over 34 years in the business, we know that buying a home is more than just a house. That's why it's important we protect our customers and safeguard their financial wellness for years to come. Visit us online at academymortgage.com today to start your journey to homeownership with Academy Mortgage. That's academymortgage.com. Academy Mortgage, your first choice home loan lender.
Academy Mortgage Corporation, NMLS 3113, is an equal housing lender.
Nobody protects you from mayhem like Allstate. I'm a speed bump. Did you hear what I said? I'm a speed bump. And if you have cut-rate car insurance, the cost to reattach your muffler could really be a bump in the road. So switch to Allstate, save money, and be better protected from mayhem, like me.
Based on coverage and limits selected, subject to terms, conditions, and availability. In most states, prices vary based on how you buy. Allstate Bar and Casualty Insurance Company and affiliates, Northbrook, Illinois.
Running out of gift ideas for your loved one? Send flowers with Flower Fix. And need to create joy in your living or workspace? With many working from home these days, create joy in your space with flowers. Flower Fix is a subscription-based flower delivery service perfect for birthdays, anniversaries, or any special occasion. We offer 2 subscription options to choose from, a text-based subscription or a traditional one. Enjoy these big, beautiful hand-designed bouquets that are delivered straight from our flower fields to your door. Log on now, www.flowerfix.com, to choose your flowers today. Have control over when you want flowers delivered. Weekly, bi-weekly, monthly? Get your flower fix at flowerfix.com. Use code FlowerFixPro to receive 20% off your first order. flowerfix.com.
Hi, I'm Stephanie Gallegos with Price for Life. Do you have a life insurance policy that you'd like to sell? If you don't need the coverage anymore or would rather not keep making the premium payments, visit our website, priceforlife.com. Don't let your policy lapse when you can potentially get a cash payment for it. There are several reasons why a life settlement might be a great value to you. Perhaps your policy is too expensive, or you feel you no longer need the death benefit, or you may think you need to wait until death before your family can get the money from the insurance company. This is why you may want to consider a life settlement. Price for Life has excellent resources available along with a free evaluation process to help you understand the value of your policy and the options available to you. Price for Life's clients have received hundreds of thousands of dollars for their policy when they would have otherwise just let it lapse by stopping the premium payments. Get the compensation you deserve. Visit priceforlife.com today and fill out the case evaluation form to see if your policy qualifies. That's price, the number 4, life.com. Priceforlife.com.
Healthcare expenses can be a burden, so why not make the most out of the money that we'd spend anyway? Take advantage of the most powerful tax advantage account title available to us, a health savings account, also known as an HSA. That's why you need Lively. Visit Lively right away. Open your HSA, roll other HSA money into that new plan, and then start saving. I know you're going to love the entire experience. Visit livelyme.com/pro today. That's livelyme.com/PRO.
Money Pros. Real Money Pros and the sponsors heard within this broadcast. Material presented on this program may not be suitable for you. Consult a registered investment advisor when evaluating any particular investment, security, or investment strategy. The views, opinions, or advice offered by the hosts and guests do not necessarily reflect those of this station. Brian Wiley and Jeremiah Bates are investment advisor representatives with Apollon Wealth Management, an SEC registered investment advisor. The Real Money Pros with Brian Wiley and Jeremiah Bates, the weekend's smartest money show. Investing, taxes, legal topics, insurance, and every other confusing money topic made simple.
We are back. This is the second hour of the Real Money Pros. If this is the first hour you're listening to, you just missed the first one, so you can find it at therealmoneypros.com. If you're listening to us right now, it's also live. Saturdays right here on this station that you're listening on. You can call Jeremiah Bates. I'm Brian Wiley. 979-59-MONEY is the phone line. I do want to see if we have time to talk about annuities. I have a friend ask me about them, and I can give you the instruction. The instructional on what they are. And this is just from my point of view, which is always, it's not always so rosy on them. So I'm just going to give you my honest point of view. And if you have different ones, we'll take that. We're also going to take phone calls. If you've got the questions, we've got the answers. Jeremiah Bates is here and Brian Wiley again. 979-596-6639. Let's go to Jim calling out of Sun Valley, Idaho. That sounds like a great place to call from. Hi, Jim.
Hey, Brian, how are you?
Fantastic, and Jeremiah's here as well.
Good. Hey, Jeremiah, I'm glad you're feeling better.
Thank you, Jim. I appreciate that.
Yes, I got a question about Bitcoin. I'm thinking about buying a few. What is it trading at today?
You watching it right now, Jeremiah?
Yeah, I got it. Just north of $69,000 a token. Now, this doesn't necessarily mean you need to buy a full token. You can essentially have fractional ownership of Bitcoin. But if you were looking to buy a whole coin is just north of 69,000.
Right. So how liquid is it when you buy it? Is it fairly liquid
Yeah, there's a market. There's certainly a market of buyers and sellers out there. I mean, if you're going to buy it, you can certainly pick it up. If you're going to sell it, you can pick it up. And you can do it 24/7, so you can go into like a Coinbase account or something and do it that way. In some cases, you might do it through your traditional IRA or whatever it might be. But it's liquid. It's just not stable. So if you're thinking, like when you're saying liquid, right, Jim, are you talking about just turning it back into cash? Or are you saying, is it stable and get the same amount?
No. I'm talking about turning it back into cash because, I've lived through the whole Bitcoin phenomenon, and I truly believe that it's going to go above 117, perhaps to 120 or 30,000 on the next run up, and I just wanted to have a part of that.
Yeah, actually, it's super easy to pick up. So I had mentioned Coinbase. There are other online exchanges. And what they're doing is they're actually providing liquidity too. So when you go to sell Bitcoin, because of the size of the blockchain, long story, it actually could take quite some time to have the trade settle. But from what I understand, they will provide the liquidity and the guarantee on the price at the moment you put the sell order in. But obviously you got to read the contracts about it. But liquid, I mean, if you want to get in and get out, you can certainly do it. You could trade it multiple times in a day, in theory. But liquidity is there. Yep, there's a market, and it seems to be a big market for it.
Good. The other question I had is, maybe this isn't the appropriate venue, but Jeremiah, I'd like to have you stop by our office. I've got some things to go over regarding taxes and business and investments. So I assume you know which business we're talking about.
Yep, Jim. It's about that time, and I love making the journey down there and having those conversations. So first thing Monday, let's get something on the books and make sure things are well calibrated.
That'd be great. Well, that's all I have. So I love listening to you, and the advice you give is incredible. So keep it
Jim,
up.
Thank you so much. I have one question for you before you go. Did you watch the opening ceremony last?
You know, I kind of did. We went to the ski joring over in Nampa at the Idaho Center. And then there was a party at Indian Creek. We ended up there having dinner and watching mechanical bull riding, which was like incredible.
Sounds fun and very local too, by the way. And Jim, thanks so much for the call. And the reason I was asking this, Jim owns a business now. I mean, we could say this. He said Sun Valley, and just know who it was, but he sells the ski tuning equipment to probably every ski race team that was presenting their athletes last night. So just about every single one of them probably buys his materials, whether it's going to be from Sun Valley Ski Tools, whatever it's going to be. But he's the guy. Like, he's the one that is making the skis the fastest they can possibly be and the sharpest they can be to get those skiers down the hill as quickly as they can be. And it's great to watch that stuff. I love watching it.
Oh, yeah, the opening ceremony, the pageantry of the Olympics.
No, not that part, the skiers.
No, yeah, but I mean, all of it's cool. I mean, before the show, I was watching
I
was watching the luge, and my daughter, this is the first time, I mean, being of age to like comprehend what's going on. She's like, that looks really fun. I want to do that. I'm like, well, you do understand they're going probably 85 miles an hour down a, very hard ice on two blades with some composite plastic right on top. It's wild.
It's when you watch them actually walking around, what I see and I kind of go back to is when my son started ski racing and he was about 6 years old. It's the excitement. These kids were like, I want to be an Olympian. I want to be an Olympian. Well, these guys made it. In fact, I met with one just last night, and I'll say his name, Eric Fisher. He was a downhill ski racer on the U.S. ski team. I ran into him last night. And he's holding some ski races where I am right now. He's like, any chance you could volunteer? And I said, wait, it's going to rain all day on Sunday. No, I'd kind of like to not. Anyhow, when I was explaining to my company what it really takes for Eric to have gotten to where he got, is when he started ski racing, there was probably 150,000 kids around the nation that wanted to be on the U.S. ski team when he was 6 when he started. And it came down to one guy, and it was him. That one guy, like he's the one that excelled. Like, there's something special about that stuff. It's like we talk about like Elon Musk. There's something special about what he's been doing or what he does, or even people that you don't like. There's just something. They've got something. And it's pretty neat to be able to see that. And I watch with the Olympians and just the excitement. Some of these people, the first time they've ever been out of their country. And yeah, I mean, you're a loser. I mean, a loser. But what a tremendous sport. And then where do you do that? It's such a sport of privilege because you got to live near a facility that offers a luge. Like, what are you going to, would it be gosh, you'd have to go to Salt Lake here in the United States or what is it in New York? Lake Placid.
Yeah.
Yep. I don't know anywhere else that offers it. Probably in Colorado, there's probably some places there too. Yeah.
No, it's a good time of year. I mean, seeing these people shine on the grandest stage. I mean, they put all their effort, dedication, discipline to go for gold, so to speak. So I think it's great. One thing I want to touch on, though, I want to get a little bit more into the operations to Jim's question where, hey, he kind of said he identified the reason why he wants to buy Bitcoin. It's great, right? And obviously I'll likely meet with Jim next week. We'll have a little bit deeper conversation. But let's imagine you're in that same boat. You're like, well, how do I actually go and buy it? It's not too dissimilar than actually the difference between buying physical gold, or do you want to own gold in the form of, let's say, a mutual fund or exchange traded fund where you could own it in your brokerage account or your IRA. If you want to go buy the physical gold, generally you're going to go to some place that offers that, whether it's a pawn shop or whatever the case is, meaning you have that process. Meaning you're going to pay some markups if you're going to sell it, meaning, yeah, it's liquid, but you're kind of beholden to what the gold market is and what those fees are, right? So let's just use Coinbase as the equivalent of that. If you want to own, using air quotes here, the physical Bitcoin, you would go through an exchange like a Coinbase or others. But let's just use Coinbase. I think it's the most known at this point. And you're going to pay some fees, but it's essentially where you take your cash and you then convert it into the form of that digital asset, which is now Bitcoin. And then you could look at doing a cold wallet storage. You could do a decentralized wallet storage, or you can own it directly with Coinbase. Those are your options. if you want a path of least resistance, you could go like if you got a brokerage account, say at Schwab, Fidelity, there's ETFs that track gold, that track Bitcoin, that track Ethereum, or there's a couple other cryptocurrencies out there. Track gold. Like the iShares Gold Trust is ticker symbol IAU, or Spider Shares Gold is GLD. So that is kind of a way that you could look at it to demystify of like, okay, I want to own Bitcoin, but how do I wrap my head around it? The technology that's in place now does make that barrier for entry essentially obsolete. But then now we always got to bring it down to this. Why are you buying it? What's the purpose? How do you see things moving forward? And that should be your base case before you go enter into that space.
Phone lines are open, 979-59-MONEY. If you've got questions, we've got the answers for you. We'll try to talk about annuities. I'm not sure if I even want to do it, but we're going to do it, I think. It's the Real Money Pros. Jeremiah Bates. I'm Brian Wiley. We'll be right back. Businesses today face a barrage of challenges. They hunt for top talent, the search for the right benefits package, and the ever-rising tide of healthcare rates. And putting together the right team to run your HR-related tasks can be expensive, let alone time-consuming. Enter Ataraxis PEO, your professional employer organization ready to tackle all your HR needs, from payroll to benefits administration, payroll services, workers' compensation, and talent recruiting. They've got you covered. With Ataraxis, you gain access to a team of experts who handle the nitty-gritty of HR, freeing you up to focus on what you do best, growing your business and growing your revenue. Ataraxis takes the time to learn about your business, crafting personalized solutions to help you and your team succeed. So say goodbye to the stress of HR administration and hello to Ataraxis. Experience the power of a true business partner with Ataraxis PEO. Visit ataraxispeo.com. That's ATARAXISPEO.com. Ataraxis, elevating businesses for the benefit of all.
Looking to make your dream of home ownership a reality? Look no further than Academy Mortgage, your first choice home loan lender. Academy strives to offer the best rates and terms tailored to your financial situation. At Academy Mortgage, you'll be treated like family, not just another file. Navigating today's ever-changing housing market can be challenging, but their team is here to help. Experience the zero-down options, including loans with no mortgage insurance. They also provide specialized medical professional loans and unique 2-to-1 rate buydowns that reduce your monthly payment for the first initial years of your loan. And forget about dealing with brokers and middlemen. With Academy Mortgage, everything happens in-house, from origination to funding. Say goodbye to hassles and surprises. Begin your home ownership journey today by visiting them online at academymortgage.com. That's academymortgage.com.
Academy Mortgage Corporation, NMLS 3113, is an equal housing lender.
Academy Mortgage, your first choice home loan lender.
I know you've been waiting a little bit longer than normal.
Jen's manicure spot needs an extra pair of hands.
Who's at the front desk right now?
Someone who's handy with everything from nail files to spreadsheet files.
Deidre's not coming in today, but we have that whole bachelorette party.
Indeed can help her hire great people fast.
I need Indeed.
Indeed you do. Instant Match instantly connects you with quality candidates whose resumes on Indeed match your sponsored job description. Visit Indeed.com/credit and get $75 towards your first sponsored job. Terms and conditions apply.
And now, back to the Real Money Pros.
We are back. This is the Real Money Pros. We are live. Phone lines are open. 979-59-MONEY. That's 979-596-6639. Visit our website, therealmoneypros.com. It is interactive. There you can get access to our sponsors. We are not we're not a sales-driven program here. Bottom line is we are here to give you advice, use our experiences from working with real-life individuals that have needs, wants, wishes, financial complications, and how can we take that and turn that into education to the broader audience, which is you. So number one, we certainly appreciate you listening. And number two, we certainly appreciate you engaging in the conversation. So whether you're going to our website, which is, again, therealmoneypros.com, or calling us, 979-59-MONEY, 979-59-MONEY. 888-596-6639. It's great for the entire ecosystem here because you never want to be in a position where you're making decisions out of fear. Brian, I'm gonna steal your language here, but what does away with fear is having education, understanding the fundamentals, the basics of how these things detach from that and make a logical decision on why this decision may be good, bad, or maybe you find that you need to learn a little bit more on what this decision in fact would actually result in, right? Because at the end of the day, we're all working towards something. We have wants, wishes, desires. Maybe it's you're trying to achieve that dream home. You want to build that mountain house. You want to go buy the boat. You want to fund your kids' college. You just want to not have concerns in retirement. Or you've absolutely crushed it because you're just really good at what you do, and now you find yourself 75 years old of like, man, I really would like to have some time, but how do I do that? Because if I don't change, I'm just going to keep doing what I'm doing and just adding points on the scoreboard, if you want to call it that. So how do you look at that? How do you remove yourself from that and see, okay, how do I structure things in a way to where they work together? I have my time, and I also have peace. That's what we're here to do.
Years and years ago, I realized that I learn visually. Yeah. Like I record things visually. It's just what happens. And then I will associate things, and that's how I do my recall. And I guess not everybody is actually a visual learner like that. So I've learned to also use metaphors and examples. And what I'm trying to do is create imagery in their mind. Again, imagery. And radio has been a great way to do that. The fear part has been something I've been trying to fight, of course, because I do the same thing too. You get irrational when you have the fear and all this stuff, so you try to learn about these things. So if you think about weekend talk radio, the reason why the Real Money Pros is actually focused on getting into the weekends, one is it was an unoccupied space for a live financial program with fiduciary level advice coming to people. But second is we're surrounded by, in some cases, hey, I'm offering some caution. Because these shows in some cases are trying to sell you something, and usually it'll be built on some sort of fear. Maybe it was a show trying to sell commodities as precious metals or whatever it is, and they're talking about debasing a dollar. And what they're doing is maybe a little confusion, plus with that confusion added to that is the hyperbole of what if, and then that creates fear, which creates the motivation, and then that would ultimately end up with those people owning whatever it is that they're offering. Well, one of the targets has been annuities, I have to admit it. And so I have a friend, she's going to get her life and health insurance license, which includes the annuity portion of it. She goes, can you tell me about annuities? And I said, oh, yeah, okay. Here's the thing. I said, are you going to sell them? She goes, well, I don't think so. And I said, okay, great. Then I'll tell you everything you need to know about them. So then you just don't. And I mean that tongue in cheek because there are appropriate examples of when the annuity is actually going to work great. And increasingly right now, trying to solve this long-term care coverage crisis where people do not have the asset protection to be able to care for a loved one, especially in a marital situation, without trying to impoverish the spouse. And it looks like the annuity, the insurance industry, has made some pretty good gains in actually helping people to save for it and cover some of the costs. And so those are some appropriate cases. But annuities in themselves are almost always fear-based, meaning it's because the insurance companies, it's technically a fixed product. Fixed means you put in money, you can't lose money on it. So you put in $1, you should be able to get $1 back. You could have fees work against that, but you shouldn't have any losses. Now, they'll say it's indexed against this performance or something, but there'll be fees because of it and so on and so forth. The reason why people will use them is usually because of the fear, because they're afraid of losing value in the markets, which means that there was an understanding that's missed right there. And so usually if we've determined that you're okay to go into an annuity with 10 years as a surrender charge, we pretty well determined that that's long-term money and probably should be invested to at least keep pace with the dollar. And you can do it very conservatively, things like that, and without locking it up. Then there's tax implications, okay? So annuities can actually have a benefit of tax deferral, but that is going to be on the growth, and you're going to be paying the taxes. You'll just get the tax deferral along the way, but you'll be taxed on the gains, and it's called post-TEFRA amount. So you have your basis amount and you have the gain amount. You're always going to be taxed on the gain amount first, so it's last in, first out, and it gets a little confusing to people. So sometimes talking over their heads, increase the fear, it sells them these things. So that's why I said I'm cautious about it. Annuities in their concept are going to do exactly the opposite of insurance. Life insurance is there to cover an unexpected loss that happened a little too soon. An annuity would be, hey, I don't know if I have enough money. I need to stretch it out. And so annuitization is usually the trigger, and that is the equivalent of a pension. Okay, so it's a stream of payments. You put in a lump sum, you get a stream of payments. It's a purchase. And sometimes those are defined on the amount, but then they'll also stage of annuities, which is usually the first stage, the growth stage, where people put in their money and the opportunity to increase that amount over a period of time. My concern with these is that they're often sold with the term guarantees attached to them. And the guarantees, if we really dig into this, they're only as good as the claims paying ability of the underlying insurance company. So if that company's in trouble, then your guarantees could be smoked. Some states have defenses for that. They have a pooled insurance programs, cooperatives. They've got some states are different, but it's still there. The problem that I have with these, again, is that you might be looking for financial advice and finding out that the financial advisor is not really an advisor, but only an insurance agent, and they're only able to do that one thing. So the best way to find out if an annuity is probably appropriate from you or for you is to find a fiduciary who also can't sell it to you. That's it. You just pay for the advice. And if it's still good then it's probably good. But other than that, the problem that I've had with these is the confusing language. So there's the participation rates, there's the maximum, the cap rates. You have the cap rates, participation rates, and then in variable annuities is when you add in a mutual fund-like component. It's called a variable subaccount. It's kind of like a partnership between the insurance company and usually some retail mutual fund company, and then they will put those funds to be available. Those can experience losses. Now it's actually those policies are partly regulated by the SEC and the insurance companies as well, or the insurance commissioners, because it is variable. It can lose. My concern with those are the fees. You've got add-ons like death benefits, guaranteed minimum income benefits. You've got the variable subaccount fees. You have contract fees, to the point where I'll ask people when I see the variable annuity contracts, I'll say, do you have any idea how much this is actually costing you? And oftentimes they'll say, oh, yeah, it's like 1.5% or something. They explain. I said, no, but you got mutual fund fees. You've got the GMIB fees. Like you're, in many cases, over 4%. And if you're looking at trying to get an S&P 500-like return that we talked about here on the air, about trying to stay in it, you're taking off a huge portion of that return to provide the security that you've been feared into buying. And so I can talk more about them. I'm just concerned. That's all. That's it. Just concerned. Don't make the decision too quickly. I'm Brian Wiley. That's Jeremiah. We are the Real Money Pros.
As we age, managing our finances can become increasingly complex with ever-changing tax laws, estate planning, insurance needs, and investment environments. At Apollon Wealth Management, their goal is simple: to help enrich your life with personalized, expert financial advice. With a nationwide network of advisors, they're committed to delivering the best solutions for your financial future. It's time to take control and get the guidance you deserve. Connect with an advisor today by visiting The Real Money Pros. That's therealmoneypros.com.
Did you have a tax strategy going into this year to help maximize your tax savings? I'm Jeremiah Bates with Tree City Advisors of Apollon. We consider key factors like required minimum distributions, Social Security, net unrealized appreciation, 1031 exchanges, and more. Because a good advisor should help you with more than just investment selection. Visit us today at treecityadvisors.com or call us at 208-888-1244.
Advisory services offered through Apollon Wealth Management, LLC, DBA Tree City Advisors of Apollon, an investment advisor registered with the Securities and Exchange Commission.
As a financial advisor, I often see that many families I meet with end up paying way too much money in taxes. If a healthy family has an insurance plan with a low deductible but high annual premium, why wouldn't they look at a high deductible insurance plan instead? They could save on their premiums and put those saved dollars into a health savings account, also known as an HSA. It's the most powerful tax advantage account title available to us, so why not use it? Take advantage of pre-tax money that could be grown tax-free and then use tax-free for all of your qualified healthcare expenses. That's why you need Lively. Our favorite because it's simple, fast, and free. I use it, my colleagues use it, and I recommend it to all of my clients. Visit Lively right away. You can even roll over your existing HSA money into this new plan and start saving right away. I know you're going to love the entire experience. Visit livelyme.com/pro today. That's livelyme.com/PRO. Lively is a proud sponsor of the Real Money Pros.
If you have a small business, Staples has your sign.
Banners for my bakery?
Staples has your sign.
Oh, posters for my new pet store.
Floor decals for a pharmacy.
Every day, Staples associates help every kind of small business create bold signs to make big impressions. And now get $10 off custom signs, banners, and spend $50 or more. This is your sign, so print it big at Staples. Ends 5/28. Visit staplesconnect.com/thisisyoursign for details.
Imagine financial advice without a sales pitch to buy something, and imagine a long-term financial plan focused on your goals, not somebody else's, and the day that you can leave your broker because you know how to do things on your own. At Tree City Advisors, we do things a bit differently than our peers. First, we help you define your purpose for investing. We help you clean up messes or complicated financial issues from your past. We help you organize all your financial pieces into something manageable. We're a fiduciary-only firm, and we design simple strategies. And we teach you how it all works without clutter, confusion, or high cost. We can either do your investments for you or we can teach you how to do them on your own. In the end, we empower you with knowledge, lower fees, and confidence. Welcome to Tree City Advisors. This is the way we think if financial advisors should work for their clients. At Tree City Advisors, we provide flat fee planning and training. We also offer full service asset management, and we employ do-it-yourself technologies. There's never a fee for an initial meeting or review, so let's get started. Learn more at treecityadvisors.com. Tree City Advisors is an SEC registered investment advisor.
You're listening to the Real Money Pros.
We are back. 979-59-MONEY. That's the phone line. Last hour, we asked people, why are you buying the cryptocurrencies? What's your purpose, and what are you looking to get out of it, and so on. Jim called the program a little bit earlier, and he's saying he wants to figure out how to buy it. Are you in the same crowd? Are you looking to figure out how something works? Call the program. Quiz us. We'll try to give you our answers best we can. 979-596-6639. Go to therealmoneypros.com. Jeremiah Bates is here. I'm Brian Wiley. Now we're just kind of kicking around topics. I actually don't want to talk about annuities anymore. I'm like, I did a terrible job at that because I sound like I'm so against them. The problem I've had with them is that I'm always cleaning up the messes of them. Like, they just didn't pan out to what they thought, and then we find out about surrender charges and how much money they've been paying in expenses, and it can be maddening. Here's one thing that did happen, though. In the late 90s and the early 2000s, a lot of variable annuity companies were selling and creating this thing called the GMIB, Guaranteed Minimum Income Benefit. There was a general trend in our industry is that if somebody had a 7-year surrender into a variable annuity, then you called them at the end of the 7th year and you tried to get them into a new one. And some of those insurance companies knew it, that they weren't going to have to actually perform on some of the guarantees they offered. And we saw this happen when there was restrictions added, when there was further expansion of the fiduciary rule or the best interest, the BI rule. And when those came out, the churning of these virtually stopped, and these insurance companies were left holding a bag of a guarantee that they weren't sure that they were going to be able to perform on. So there's the guarantee part, right? Put them under too much financial stress. So they were sending out cash offers to some policyholders offering to buy them out of their GMIB, and it made the gains worth it and the opportunity to leave the policies worth it. And in some cases, we're just sitting and waiting for the next offer to come around. So they're not all bad. It's just there may be something better there for you, or just get the confirmation that what you're in is correct and good for you.
Yeah, that's my big takeaway. I know you don't want to talk about it, but I would add this. All these types of things are a tool. We've all been subject to some point in our life where we made a decision or used something because we thought it was the best thing at the time based on the knowledge that you had, and then you move forward with it, and then turns out it's like, oh, man, I didn't know I could have used that type of tool, or I could have used that, which would have been way better on what I was trying to achieve. Like, my mind immediately, I still get grief from this from my wife, but long story short, my daughter, this was last year, maybe a year and a half ago, she was at school, she tripped, skinned her knees up really bad, like the first, like, like when you're a kid, you just get that road rash and just like bad scab. It's the first one that she had, and it was too big to put a Band-Aid on, so we had like those, those bandages, but we didn't have any medical tape, so in my infinite wisdom, I had this athletic tape that I use that's really, really sticky. Like if I'm training jiu-jitsu and I got like a blister or something, it works great for that. And it pops off usually because you sweat, pinch it strong enough where it'll hold the bandage on where it is on the knee. But we eventually can tear it off just if we put it under some hot water. Well, turns out the hot water didn't do anything on it. And taking this tape off was like not in the equation here with my daughter. So this tape was on her knee for probably like a month. Like we had to take it off in little chunks. It was not a good deal. But in my mind, I'm like, hey, this is good tape. It's not too sticky, but sticky enough. It'll give the result that we need. And it was really dumb looking back on it. Still get grief for it. And looking back, I should have just got the medical tape and used that, or maybe done a little bit of research. In my experience, and Brian, you nailed it too, with these annuities, especially clients that I was working with, it just was not the right fit. Not that, meaning there just wasn't a deeper dive. Like, what are we really trying to accomplish here? Okay, once we get that deciphered out, then we can get educated on what annuity actually is. How is it going to do? How is it going to operate moving forward in the short, midterm, and long term? And then once we extract all that information, then we can logic ourselves into, okay, based on everything that we know all the ins and outs of the annuity and how it operates. Should we plug it in as the tool that we're going to use for what we're trying to do? And in my experience, Brian, in your experience, more times than not, there is a better result. Like there is an alternative option that is just a better tool. Whether you're trying to looking to get income, whether you're trying to preserve your money, whether you're trying to be efficient from a tax standpoint or an estate standpoint, usually those don't fit the box. So I think that's the benefit of talking about getting an unbiased opinion from a fiduciary advisor who is not incentivized to sell you that annuity. You just get the education. And then at that point, you can make a collective decision on is this a good idea or not. So that's my take on the annuity side.
There has been a new trend, as you're aware of as well, which is fiduciary advisors can refer it out to companies who just don't pay them a commission for it, but at least you know that the clients are being taken care of, and they're done so without having that commission incentive put onto it. So advisor annuities also became a thing where they were typically more liquid to the client, and they were usually at a lower cost, but it was an ongoing fee because the advisor is going to manage the investments inside of it. And if that's the case, you're probably using it for tax deferral. Yeah. So in a non-qualified scenario where this is money coming out of your checking account or trust account or business account for all that matters, which you got to name the natural people on it, you can get tax deferral on the growth and not have to pay the taxes until you take the money out. Now, there are so many different ways to spin that one. The problem that I've noticed is that some people will put them inside of IRAs, and which means you didn't need it for the tax deferral. So then you bought it for what? The safety, the perceived safety. There could have been better things to be in non-qualified money. And every case it should be looked at, which is what are the liquidity costs? What are the tax consequences of this? What are the true costs of it? And do I understand that full environment before you go into it? And I would say that the vast majority of people, the answer is no, because the same thing that brought them in there, the hyperbole of fear, is the same thing that sold it to them. And fear is best maintained by keeping education minimized. That's the best way to keep them fearful, is just don't tell them everything and don't tell them everything you know. Confuse them with just a little bit. I was actually trained in this industry, and I remember having an instructor say it in that way. He goes, you just got to keep them a little bit confused so they know that you are the authority. I'm like, man, does not feel right. So it just didn't feel right at all.
Feels greasy. Feels very greasy.
Oh, man, it soured me so bad on that. And I was with another firm at the time, and their whole end game was just annuities or variable annuities or planning products. And I got some really good training through them, but then I was about ready to throw in the towel and just be done with it, because I couldn't contact a family member or a friend and try to hook them into something that I didn't believe in. And so got out of that, and I learned about the fiduciary world. And I'm really, really hoping that people consider that to be the stronger, better relationship for you. Pay it like an hourly fee if you can. Do it as a checkup, or you don't have to have an ongoing fee. When I said earlier, everybody's capable of doing this on their own. You could follow a system. It's just, are you disciplined enough to do it? And is that little fear component barking at you enough that you're going to start to twist the system, in which case just pay somebody to help you out. When you gave that example of the S&P 500 missing the 5 best days in 2006 to 2025, you used $100,000 invested in 2006. Mm-hmm. And then 2025, it had been worth 800 something, right?
Yeah,
right around there.
A little north of 860.
As I had asked that question, could we find anything about the missing the 5 worst days? And we both found results. And bottom line is it looks like it's about 10% higher. So maybe that 800,000 goes to almost 900,000. And that's assuming that you sold out on the 5 worst days and knew when to get back in to make sure you captured the 5 best days. Well, you know that the emotions that drove the markets to sell down that deep were probably the same emotions that prevented you from buying in the next day. So we're already weak to that. But if you have somebody, because nobody's ever going to love or care about your money as much as you do, if you have somebody else who says, okay, well, I'm your coach. Here's the thing. You got to get back out the field, and you got to keep playing. We're not going to stop playing. We're going to, it's good for you. And it may actually produce the best results. It's just a little guidance. I wish I had somebody guiding me through some of the stuff in my garage here recently. But
yeah, it's some of these things, like prime example in this, I mean, thus we're kind of bouncing around here a little bit, but just kind of give you the idea, the sentiment that we're really trying to put across here. So I got a client where they have their child entering into an employment opportunity through the city. So they got hired, and now they have all these benefits that are offered by the city. And one of them is a 401k, and one of them is a 457B, which is only offered to a certain category of employees. They also have a pension through the state, and obviously the various health benefits that come through that. And it's like, hey, can you help me out? Just kind of understand these. I'm like, oh, great. And from the outside looking in, that 457 walks and talks a lot like the 401k as far as the taxation of it and the deferral limits that you can put into it. But a big thing with the 457 is that you're not subject to that 59.5 rule, meaning there's no early withdrawal penalty. You can pull the money out any point in time, which is very important to note, because let's imagine if you have a 457B and you're thinking, man, I want to roll this into an IRA. I'm retiring at 55. You should really reconsider that approach, because if you roll it into an IRA, you just lost that penalty-free distribution out of that 457. You can see how sometimes the focus on the markets and the hyperbole, you think that's the biggest decision here that's going to make or break. No, it's usually these nuances around account types. Where's your money held? At what time are you going to pull the money out? Those are usually the biggest drivers. Again, this is the Real Money Pros. We are live. Phone lines are open. We'll be right back.
Businesses today face a barrage of challenges. They hunt for top talent, the search for the right benefits package, and the ever-rising tide of healthcare rates. And putting together the right team to run your HR-related tasks can be expensive, let alone time-consuming. Enter Ataraxis PEO, your professional employer organization ready to tackle all your HR needs, from payroll to benefits administration, payroll services, workers' compensation, and talent recruiting. They've got you covered. With Ataraxis, you gain access to a team of experts who handle the nitty-gritty of HR, freeing you up to focus on what you do best, growing your business and growing your revenue. Ataraxis takes the time to learn about your business, crafting personalized solutions to help you and your team succeed. So say goodbye to the stress of HR administration and hello to Ataraxis. Experience the power of a true business partner with Ataraxis PEO. Visit ataraxispeo.com. That's ATARAXISPEO.com. Ataraxis, elevating businesses for the benefit of all.
I know you've been waiting a little bit longer than normal.
Jen's manicure spot needs an extra pair of hands.
Who's at the front desk right now?
Someone who's handy with everything from nail files to spreadsheet files.
Deidre's not coming in today, but we have that whole bachelorette party.
Indeed can help her hire great people fast.
I need Indeed.
Indeed you do. Instant Match instantly connects you with quality candidates whose resumes on Indeed match your sponsored job description. Visit Indeed.com/credit and get $75 towards your first sponsored job. Terms and conditions apply.
As a financial advisor, I often see that many families I meet with end up paying way too much money in taxes. If a healthy family has an insurance plan with a low deductible but high annual premium, why wouldn't they look at a high deductible insurance plan instead? They could save on their premiums and put those saved dollars into a health savings account, also known as an HSA. It's the most powerful tax advantage account title available to us, so why not use it? Take advantage of pre-tax money that could be grown tax-free and then used tax-free for all of your qualified healthcare expenses. That's why you need Lively. Our favorite because it's simple, fast, and free. I use it, my colleagues use it, and I recommend it to all of my clients. Visit Lively right away. You can even roll over your existing HSA money into this new plan and start saving right away. I know you're going to love the entire experience. Visit livelyme.com/pro today. That's livelyme.com/ is a proud sponsor of the Real Money Pros.
We're back to the Real Money Pros.
We are back. This is the Real Money Pros, therealmoneypros.com. I'm looking at Jeremiah. Jeremiah's looking at me, and it was
You go.
Yeah, who's starting? Who's going to do it? Call the program at 979-59-MONEY, and if you miss us today, then go to therealmoneypros.com. Join the newsletter list. Stay in contact with us. Ask us questions there. We will answer them during the week. If it's a great question, we'd like to read them on the air. We will share those thoughts. We never will out you or say it's you or where you're from or anything like that. We won't give any identifying information, but oftentimes it's a great instructional moment, just like the same thing about questions about annuities. And mine is just, as a financial advisor, I've noticed that the product sales can sometimes be very predatory. And that's, I just want to save people from that. So you go in, you don't want to, I mean, sometimes they're useful. And they're useful tools, and that's what I need to keep in there. I just have dealt with a few of them trying to unravel them, and can be a big mess and all that stuff. Anyhow. Am I missing?
No. It's like I said, like I can give you plenty of examples, but I will say this. There are some new structuring of these annuities that do also serve a dual purpose, whether it pays a death benefit out of the end or there is a long-term care provision built into these. So, but again, now we're adding in some various complications, some important nuance to these policies where it truly should be solved for. Meaning, I've identified this need, I've identified this risk, I've identified this fear. Now insert. Generally, there's going to be more options, right? You're going to have an option A, B, C, and D. And then you look at all those various options, understand the opportunity cost of what's going to be involved in that, and then you go from there, and then you feel really good about the decision after you've made it versus limited information, make a decision, then you lament it moving forward, which we've seen before. Phone lines are open, 979-59-MONEY. That is 979-596-6639. We're going to go to the phones right now. We have Kimberly calling out of Florida. Kimberly, what can we do for you?
Hi, guys. Thanks for the show. I was just wondering, I heard you talking about crypto and all, and I've seen ETFs now, and I think there are going to be more of them that combine private and public companies together. And it's a little tricky. Even when I call Schwab or anybody else, they really don't know much about it. And I was just wondering what you thought of them, or, I mean, I don't know. Is this something that's going to be coming more often? What's your thought?
Yeah, I mean, I'll say this. I'll answer the latter part of the question. Of we've certainly seen that trend where whether it's BlackRock, which they have the fund lineup of iShares, they have a spot Bitcoin ETF. Fidelity has a spot Bitcoin ETF, and what I refer to that meaning it just tracks the price of that underlying asset or holding, which in this case is Bitcoin. We've seen that with Ethereum. I believe that XRP or Ripple, I believe there's ETFs. Maybe if not yet, I do know that they're trending in that direction. And there's a couple other companies that are coming out with that are looking to enter in that ETF space. So 100%, I agree. There's going to be more companies that are issuing these ETFs that gives you exposure to those crypto.
But it sounds like, are you saying exposure to the cryptos, or are you saying, Kimberly, that the investments inside the ETF is a combination of publicly traded companies and private?
Actually, mostly your second, but a little bit of that because of your first with crypto in particular. But there's a ticker XOVR, for instance, and they had SPV to SpaceX and Klarna.
Okay, yeah.
And some might have Bitcoin or whatever as a private company in that ETF, and it's just confusing.
Yeah, it is confusing, and now I'm getting what you're saying too. So when they go back to price the ETFs, that's got to be tricky, because how do you price a privately held company? I mean, we went through this 6. It was called mark to market. Mark to market was the valuation that companies were saying that their real estate holdings were worth, and so on and so forth, and that was the way that they would account for them on their financial statements. And it's the same thing with these ETFs. And you're saying there's a combination of these publicly held and privately held. Like if it has SpaceX ownership in it, it's just interesting, because how do you value that? Do you know anything about those type of funds?
Yeah, I mean, I do know that there is this. We're starting to get more momentum on these kind of hybrids, right? I guess I don't know if that's the right word, but it's the best one that I could come up with, where it's a publicly traded vehicle that's in the wrapper of an ETF, where you can go in and buy those shares, and then within that ETF, within that wrapper, there's various holdings, meaning you do have some exposure to some privately held companies, meaning they're not publicly traded, right? Because if you want to enter into that private company space, aka alternative investments, a lot of times there's criteria that you need to meet to fill out that subscription agreement that allows you to have ownership of that. But on the flip side of that is, it's not, you don't have liquidity. It's not easy now because there's no market for it, right? You're beholden to the fund, so to speak, of that private company to
and what they say it's worth.
Yeah, exactly. So,
Kimberly, what were you going to do with it?
Use it for retirement, put it in a Roth maybe. Once I found a particular ETF, I did see one that actually had some holdings in it, 35 holdings that were combination. But the fear is, again, I can't seem to reach the fund owner, and I can't seem to get an answer from any of the main custodian companies. So no one seems to know the answer.
How do you find them, or who's presenting it to you?
Just in a regular search, I found one particular company online looking for a pre-exposure to SpaceX, and that's how I found this one particular company.
Well, I got to tell you, because we actually have a great investment team that's part of Apollon Wealth Management, and so we could reach out to them and have them give you a response, because I'm also interested in this as well, which is, where do you get the research on it? Yeah, if you're able to stay on the line, we can forward that call on to, I was thinking Eric or somebody like that.
Yeah, not a bad idea.
That might be able to answer that question. Be good for us to know as well. But whenever you see privately owned companies in a publicly traded position like that, it's really difficult to value it. And SpaceX isn't kicking off an income. So, I mean, you're talking about, will you get the IPO? Does that mean that you're going to benefit from when it does become publicly traded? I would guess to some degree, but I have no idea. We don't know how the contracts are going to look yet. I'm so curious how Elon Musk is going to organize this, what is it? He's going to XAI and SpaceX integrate them somehow.
Yeah.
I don't know.
Well, I think it's already
but
done.
I'd like to own it too.
From my understanding, and Kimberly, sorry to cut you off, and I'm sure we were going to say the same thing, that January 31st, that merger was complete. So now you have XAI, SpaceX, what you could argue is the two largest privately held companies that have now merged. That I think the anticipated value, again, take that with a grain of salt, is over, I think it's like 1.5 or maybe $1.5 trillion. And obviously with the expectation of that initial public offering for this company. The one thing I don't know is, I don't know if with that merger, if it's a new company or if it's all under SpaceX or if it's all under XAI. That's one answer I don't have.
Well, I would definitely hold and love to know more and just see where it is, and maybe we can all benefit together.
Yeah, I mean, really, it's always going to benefit from the education. And yeah, stay on the line. We'll get your number, and we'll have somebody give you a call or a message on Monday, because I think there are resources out there we could figure out which, ETFs that hold these. I don't know how you would evaluate those, and I'd like to learn about that as well. And certainly a great question. Thanks for the call, Kimberly. Oftentimes, like innovative new investment products can be pretty attractive. You got to get into the fine lines of it. And I can tell you, it's burned me a few times as an advisor. I remember not knowing about one of the rules that one of the annuity companies was using on their GMIB, and ended up calling them, and nobody knew about it except for the supervisor who finally found it, and it was deceiving. It was one of those things that really soured me on that industry at that time too. So make sure that we're doing our research on it. And Kimberly, we got to make sure we know the objectives, and once it's all established, and of course, find the right ways to do it, most efficient ways to do it. Good stuff.
Yeah, and I mean, I like the approach. She obviously sees the opportunity of what Mr. Musk is doing and the potential for that to disagree with. So the question is, how can you get creative and find a way to take advantage of that investment before it becomes an IPO, or just get exposure to it while we're waiting until we can actually get shares of that individual company? But great question, Kimberly. We're going to get you an answer, and we'll find a way to get it to you.
Well, this is The Real Money Pros. You can catch us each week live. You can also catch us online at therealmoneypros.com. Podcasting, all of it's available to you. Jeremiah, thank you. I'm Brian Wiley.
The Real Money Pros is hosted by Brian Wiley and other team members of Tree City Advisors of Apollon. Tree City Advisors of Apollon is a DBA of Apollon Wealth Management, an SEC-registered investment advisor and affiliate of The Real Money Pros. The Real Money Pros and Tree City of Apollon are not affiliated with any of the companies or non-advisor professionals participating on this program. Ataraxis PEO and Apollon Wealth Management are financial sponsors of the Real Money Pros. Additionally, Apollon receives advisory fees for these sponsors and or their representatives for investment advice. Log into therealmoneypros.com to contact the host for advice, show archives, educational material, and more. This program is brought to you by the quality sponsors heard within this broadcast.
Businesses today face a barrage of challenges. They hunt for top talent, the search for the right benefits package, and the ever-rising tide of healthcare rates. Ataraxis takes the time to learn about your business, crafting personalized solutions to help you and your team succeed. Ataraxis partners with businesses of all sizes and industries. Their mission? To reduce the stress and risk that comes with business owners trying to do it themselves. Visit ataraxispeo.com. Ataraxis, elevating businesses for the benefit of all. Apollon Wealth Management has helped me and my team change the way we conduct our advisory business. The result? We believe we are better equipped to provide the highest level of quality financial planning, investment management, and comprehensive financial advice than ever before. Apollon has been instrumental in our efforts to assist clients in achieving their distinctive financial objectives. If you're an advisor seeking to improve your client experience or an investor seeking to elevate your wealth management to a higher personal standard, contact us at The Real Money Pros. That's therealmoneypros.com. Imagine financial advice without a sales pitch to buy something. Imagine a long-term financial plan focused on your goals, not your investment professionals. At Tree City Advisors, we do things a bit differently than our peers. First, we help you define your purpose for investing. We help you clean up messes and complicated financial issues from your past, empowering you with knowledge, lower fees, and confidence. We design simple, effective investment strategies, and we teach you how it can all work without clutter, confusion, or high costs. Welcome to Tree City Advisors of Apollon. This is the way we think of financial advisors should work for their clients. At Tree City Advisors of Apollon, we provide flat-fee financial planning and training. We also offer full-service asset-based investment management, and we employ do-it-yourself technologies. Visit treecityadvisors.com. There's never a fee for an initial meeting or review, so let's get started. Learn more at treecityadvisors.com. Advisory services offered through Apollon Wealth Management, LLC, DBA Tree City Advisors of Apollon, an investment advisor registered with the Securities and Exchange Commission.